Vicky. Look, the feedback from investors has been very, very positive, and it's been, it's really pleasing to see the support we've received from shareholders, and I think it's a testament to the rationale for the transaction, which is transformational for IOOF and for the industry.
Am I right in thinking that once this transaction goes ahead with MLC, that you'll actually have more funds under management than Aussie Super?
We've certainly been the top 2 or 3 in the superannuation industry. So certainly the benchmarking that we did was from the latest APRA data, which is from 2019. So I don't want to speak for movement in assets since then, but certainly we'll be in the top 2 or 3 funds in Australia.
Now, you've said this week that you don't want to be big for big's sake, but you have had these 2 acquisitions, firstly from ANZ and then from NAB in quick succession. One of the concerns is about execution risk, that you've actually just perhaps taken on more than you can chew.
Look, it's certainly a valid question, and something ourselves at IOOF, we've had to convince ourselves of our ability to deliver to the integration plans and to do so in a way that delivers better outcomes to members as well as shareholders. And certainly through that, we've had conversations both with the regulator and obviously our shareholders around our planning. We have the best track record, I believe, in terms of integration and simplification of all the wealth players in the market over the last 10 years. So the track record would suggest we can do it. And certainly we've been very rigorous in our planning to ensure that we deliver on that promise. You
are targeting $150 million in synergies a year from MLC. Now, how are you going to do that?
Well, we've already started that planning process, and certainly when you have 2 large like-sized organisations put together, there is duplication of function. And certainly as a specialist wealth manager ourselves, I believe the cost structure that a specialist fund manager would run the business tends to be quite different to something that you'll see in the bank. So I think both those combined give us real confidence that we can extract those $150 million in synergies.
Renato, part of your merging of these businesses is what you're doing with financial advisors. As I understand it, you're actually simplifying things, but actually removing quite a lot of brands that are not IOOF and bringing more advisors onto the books. Now, what's the thinking there?
Well, clearly we're a firm believer in the importance of advice, and we're staking a claim as the largest organisation in support of financial advice and advocate for financial advice. Part of that is important to ensure that the financial advice model is sustainable going forward, and that is ensure that everything we do translates to value. Part of that has actually involved us simplifying our brand, simplifying our business structures to ensure that we can deliver advice in a cost-effective manner and make it as affordable as possible. Part of that, then certainly one of the attractions with the MLC transaction is to bring more advisors on board, is to give those advisors greater choice, and to put them in a position where they can actually genuinely add more value to clients and do so in a way where the client is at the centre of everything the advisor does.
And how do you keep morale going when clearly this is a really difficult time for the financial advice business?
Yeah, it's a great point, and I think it's a difficult time for everyone, both inside advice and outside of advice, given everything that's happening around us with respect to COVID. The one observation I would make around both the ANZ transaction and the NAB one is, with ANZ, we've been pleasantly surprised how people have reacted to being part of a specialist wealth management business, and I think being part of a business where what they do on a day-to-day basis, they can see translate to outcomes, and that's somewhat different to being sort of a wealth business that's part of a larger bank. So the focused nature of our business, we've found, actually has people being more invigorated, if you like, about being part of a specialist wealth manager.
Rather than a business that everybody seems to be wanting to get rid of on the big bank side. But correct. Going to your results, now your underlying earnings were a drop 35% down to 128.8. But overall, how do you think you fared through COVID?
Look, there's no doubt that the COVID's had an impact on our revenue and on our profit. And I think it's fair to say it's had a dramatic impact on society as a whole. The thing that I admire the most is the resilience of the business throughout that period, and importantly, how we've been able to support clients, both from an operational perspective in terms of our service levels, which I think have been outstanding, as well as from an investment perspective and making sure we can continue to manage people's money in a really methodical way. So the business has performed incredibly well, but clearly our financials have suffered as a result of
Now,
COVID.
notwithstanding that, you still, as a board, decided to pay a dividend, didn't you? 11.5 cents. What is the thinking there and your message?
Well, the message for us is we recognise the importance of rewarding our shareholders and looking after our shareholders despite the difficulties of these times. It's important to note that there are many retirees who are relying on dividends to actually fund their lives. And in an environment where interest rates are low, we remain cognizant of that responsibility. Likewise, it does demonstrate the resilience of IOOF's balance sheet as well as the business model as a whole, the fact that we were able to pay a dividend.
You still have your retail entitlement offer to go. Now, what would you say to retail investors, shareholders, thinking about whether they should invest and take up their rights in this offer?
Well, certainly what I'd say, Tiki, was that from an institutional perspective, there was a lot of very strong support from existing shareholders, as well as some high-quality asset managers joining the register as part of that process. So from a retail perspective, I think it's to say that there is institutional support. As an organisation, we remain committed to ensuring that a dividend yield is part of our profile as a business. We've got a very strong balance sheet, and this transaction gives us a fantastic opportunity to build Australia's leading wealth management organisation.
Today, AMP, another major wealth manager, announced a review of its portfolio. Obviously, it's been struggling very much of late. Were you one of the interested players that they mentioned, interested in some of their assets, and would you be?
Look, we don't like to comment on speculation, and certainly other firms. What I would say, however, is that we've been very, very busy working on this transaction with the National Australia Bank, and having now completed the transaction, we've got our hands full for the coming years. So we're focused on making sure we deliver on our commitments. Right,
so that's for the coming years, but presumably the regulator might even have issues of you getting any bigger than you are with an AMP financial advice asset as well?
Oh, look, I think that's for the regulator, but I certainly think where we would agree with the regulator, it's really important that we integrate this business and we acquire this business and ensure that all of what we're saying and doing is actually translating to member outcomes. And as I said, we've got a full dance card, if you like, and we need to make sure we do this really well before focusing on anything else.
Renato Mota, it's a huge week for you. Congratulations on the acquisition. Thank you very much for joining us.
Thanks, Vicky.